It's Thursday, March 20th, 2025, and welcome back to the Finwell Daily Brief. This is our fourth edition, folks.
Hi.
And today we're going to dive into some really interesting developments in the Indian financial markets. It shouldn't take too long, maybe around 10 minutes or so, just to give you a quick but insightful rundown. We're going to be drawing, as always, from various platforms to give you the most accurate and up-to-date picture of what's happening. So, ready to jump in?
Yeah, absolutely. Sounds like a lot's going on.
There really is. Let's kick things off with the performance of the equity markets today. It was a bit of a mixed bag, honestly.
Okay.
The Nifty 50, it closed pretty strong at 23,190.65, which is a jump of 1.24%.
Not bad at all.
Not bad at all, but here's where it gets a little interesting, right? The Nifty Midcap 150, it saw a more modest gain, about 0.55%, closing at 18,948.45. And even the Nifty Small Cap 250 is up, but again, not by a huge margin, just 0.78%, closing at 14,922.35.
So the smaller companies didn't quite keep pace with the bigger ones today.
Exactly. And even the Nifty 50 Sharia, which tracks Sharia-compliant stocks, it also mirrored the Nifty 50, up 1.22% to 4,590.95.
Interesting.
But when we look at the Nifty Total Market Index, it climbed by 0.98%, closing at 11,843.50. So overall, it was a positive day for the markets, wouldn't you say?
Yeah, definitely positive, but I think you're right. There's something more to this story.
Absolutely. Now, shifting gears a little bit, let's talk about the bond market. The yield on the 10-year Indian government bond, it actually dipped to 6.70%. Now, for our listeners who maybe aren't as familiar with the bond market, can you quickly explain what this decrease in yield actually means?
Sure. So when we talk about government bonds, think of them as like a really safe bet for investors.
Right.
When the yield on these bonds goes down, it generally means that more people are buying them. They're in high demand. It's kind of like, if you have a really popular restaurant, they don't need to offer big discounts to get customers in the door.
Right. Makes sense.
So in this case, the lower yield on Indian government bonds, it could be a sign that investors are feeling really confident about the government's financial future. They're saying, hey, we trust this, let's invest.
That's a good way to put it. And speaking of confidence, let's move on to the Indian rupee. It's been having a stellar week, wouldn't you say?
Yeah, it really has.
7 straight days of gains, closing at 86.3675 against the US dollar. This is actually the longest winning streak we've seen since January of last year. I mean, earlier today, it even hit a near 2-month high. So what's driving this impressive rally? What's going on?
Well, it seems like a few things are coming together to give the rupee this boost.
Yeah.
The main factor seems to be foreign banks in India. They've been selling a lot of dollars and buying rupees. And, when you have more demand for something, its value goes up.
At least it's economics, right?
Exactly. And on top of that, we've seen a drop in what are called short positions on the rupee. These are basically bets that the rupee will lose value. So the fact that fewer people are making these bets suggests that there's a growing belief that the rupee is going to stay strong.
I see. So more confidence, less risk, stronger rupee.
Exactly. It's kind of like a snowball effect. And, this overall confidence, it likely stems from the fact that foreign investors are becoming more optimistic about India's economic future.
Right. They're seeing India as a good place to put their money.
Precisely.
Yeah.
And a stable, strong currency like the rupee, that's a really positive sign for them. It signals a healthy economy.
Absolutely. Now, let's zoom out a little bit and talk about what's happening globally, especially with the U.S. Federal Reserve. They recently announced that they're going to slow down their balance sheet reduction, and they're even projecting 2 interest rate cuts later this year. So how does this news from the Fed affect us here in India?
That's a great question. It really highlights how interconnected the global financial system is. When the Fed, which is basically the central bank of the U.S., signals that they're going to lower interest rates, it creates a ripple effect across the world.
I see.
One immediate impact is that U.S. Treasury yields might go down. This could make investments in the U.S. less appealing compared to other markets, including emerging markets like India. So foreign investors might start looking to India for potentially better returns.
So the Fed lowering rates could make India more attractive to foreign investors.
Yeah, that's the general idea.
Yeah.
However, there's also a flip side to this. The reasons behind these potential rate cuts in the U.S., like concerns about their own economic growth or slowing inflation, those can have big implications for the entire global economy.
Right. It's not all sunshine and rainbows.
Exactly. So it's really important for us in India to keep a close eye on what's happening in the U.S., especially things like consumer sentiment and inflation. Any big changes there could definitely impact our markets too.
Got it. So we need to stay informed about the global picture.
Absolutely. Now, switching back to the domestic front, there's some good news about inflation. India's inflation rate actually eased to 5.22% in December 2024, down from 5.48% the month before.
That's good news, right?
Definitely. It's a bit of relief for consumers who've been dealing with rising prices. And it gives policymakers, especially the Reserve Bank of India, some breathing room to make decisions about future monetary policies.
Right. It's a positive sign all around. And while we're on the topic of inflation, let's not forget about crude oil prices. Brent crude futures are currently trading at around $71.01 per barrel. So how does this figure play into India's economic situation?
Crude oil prices are a big deal for India, mainly because we import a lot of it. So when oil prices go up, our import costs increase, which puts pressure on our foreign exchange reserves.
It's like paying more to keep the economy running.
Exactly. And higher oil prices also mean higher transportation costs, which can then lead to higher prices for goods and services across the board. So the fact that oil prices are relatively stable right now, that's a good thing for India. It helps keep inflation under control.
Makes perfect sense. Now, earlier we talked about concerns about a potential slowdown in the U.S. economy. So how does that connect with what we're seeing with the rupee's strength?
Well, when people worry about the U.S. economy slowing down, they often start selling U.S. dollars and investing in other markets that seem more promising.
Okay.
So this can cause the value of the U.S. dollar to drop, which in turn can benefit currencies in emerging markets like the Indian rupee.
So a weaker U.S. dollar is actually good for India in this situation.
In a way, yes. It's kind of ironic, but those concerns about the U.S. economy have actually helped boost the rupee.
The global economy is full of surprises. So taking all of this into account, what's the general outlook for Indian markets right now? Any key investment themes we should be paying attention to?
The overall sentiment in the Indian stock market seems to be cautiously optimistic, I'd say. The strong performance of the main indices, along with the rupee's gains and the continued interest from foreign investors, that all points to a degree of confidence. And the fact that the 10-year bond yield is going down suggests that people are expecting supportive monetary policies in the future.
So positive signs, but with a bit of caution mixed in.
Exactly. Now, when it comes to specific sectors, the government's focus on boosting manufacturing and infrastructure, that presents some really interesting opportunities, especially for companies in the mid-cap and small-cap segments.
The Make in India initiative is still a big deal then.
Absolutely. And of course, India's IT sector remains a major force driven by global demand. So those are definitely areas to watch.
Got it. Manufacturing, infrastructure, and IT?
Exactly. But it's important for investors to be aware of global risks too, like what the Fed does next or any geopolitical issues that might pop up.
Right. Always keep an eye on the bigger picture.
Precisely. Now, looking at broader investment themes, domestic consumption in India is a huge growth driver, fueled by the growing middle class. And the digital transformation happening across various sectors is also creating a lot of opportunities, especially for tech-focused businesses. And let's not forget infrastructure development, which has strong government support and is a key area for long-term growth.
So many exciting possibilities.
There really are. And in this kind of environment where there are both opportunities and risks, the best approach for investors is diversification. Spreading your investments across different sectors and asset classes can help you manage risk and potentially benefit from growth in various areas.
That's always good advice, diversification. So to sum up our conversation today, it seems like the Indian markets are holding strong, supported by a strong rupee and positive investor sentiment. But the global economic situation, especially what's happening in the U.S., requires careful attention.
Absolutely. Staying informed and making well-thought-out investment decisions is key in these dynamic times.
Well said. Now, before we wrap things up, we have a few calls to action for our listeners. If you found this briefing helpful and want to stay up to date on the latest financial and economic news in India, be sure to subscribe to the Finwell Daily Brief. You can also connect with us on LinkedIn for more in-depth discussions and insights. Just search for SOS Finwell, that's SOS Finwell on LinkedIn. And one last time, for those who want to engage with us and dive deeper into these topics, please connect with us on LinkedIn, SOS Finwell. We really value your engagement and look forward to connecting with you there.
Absolutely looking forward to hearing from everyone.
And on that note, we'll leave you with a wise quote from the legendary investor Benjamin Graham. The individual investor should act consistently as an investor and not as a speculator. Thank you for joining us for this edition of the Finwell Daily Brief. We'll be back again soon with more updates and insights from the world of Indian finance.
Until next time.
Take care, everyone.
Bye.